Hey guys, what is up and welcome to a new NVIDIA daily update video. So today, as per usual, let's go over NVIDIA. Let's talk about what is happening to NVIDIA as it is once again underperforming the market a bit here, down 1.64%, down to 174s once again into that support range. I'll give you my thoughts moving forward. If you enjoyed, don't forget to hit that like button. This is not financial advice. And I'm not a financial advisor. And of course, if you enjoy my technical analysis, thoughts on the charts, etc., well, again, I do share my updates with my members every single day as the market is trading, as the market is open, etc. Throughout the entire trading day, constantly sharing posts. So if you're interested, would love to have you there. Every single video, the description has a link to it. So if you just click this, you get the options to join whichever tier you want. The first tier, just $3 a month USD. All my Tesla updates, intraday updates, technical analysis, options flows, etc., and broader market updates. $5 adds also NVIDIA to that as well a month. $7 a month adds everything I just mentioned, plus non-Tesla, non-NVIDIA, non-broader market stock updates, and a Discord access, like the private Discord access where we have, chat rooms. I have weekend chart reviews with members, etc. So again, we'd love to have you there if you're interested. But jumping into NVIDIA, down again, 1.64%, right into that support range. We've been talking about this 174-ish range being pretty important, right? I do view this 174-ish range quite important. This is, in my opinion, a range the bulls definitely want to hold, right? They definitely want to see a bit of a bounce from here to have this potential bullish thesis that is trying to counterplay, if you will, the bearish thesis, which again, the bearish thesis, like I mentioned before, is, well, structurally, we're still making lower lows, lower highs, right? We are still technically rallying into the green Fibonacci's. If I take this very quickly, right into the green Fibonacci's, right? There is still a pretty strong bearish thesis, structure, whatever, in play, right? We can't fully ignore that. But the bulls, they still have a chance. So they have a chance to nullify that bearishness, right? And the way they want to nullify that bearishness is, in my opinion at least, 174 roughly. You definitely want to go and hold it. Go ahead and hold it. Maybe we get a sweep. Maybe we go below it. Maybe wick down below, but then close back above. If I see that, that's actually very bullish. That signals to me the fact that the stock is probably ready to go. But, we essentially don't really want to start closing, in my opinion, at least, daily candles well under 174. That would be a sign of weakness, in my opinion, a sign of bullish momentum, really just not following through. Let's just say that, right? So that's what they do not want to see, right? And what they do want to see is, well, like I said, holding this, but they want to break above this kind of, trend line right here, right? You can see we're constantly getting rejected, right? We want to eventually kind of, make our way here and then breakouts, right? We'll have a candle here, break above that candle, and then, hey, it's looking pretty solid in my opinion. So you want to watch for those kind of situations. You want to see this kind of happen. And if it does, we can absolutely, at the very least, if it happens, let's say down here, get a retest of the 181 region, but maybe this pressure that's building up here from this impulse to the upside into a bull flag can be that sort of pressure building that will give bulls that sort of steam, that fuel, if you will, to break above those green Fibonacci's, break above the 181-ish range, and start really kind of crumbling, if you will, that bearish thesis that absolutely still exists. That's kind of what the bulls want to see, right? That's the more bullish perspective, and it's still alive. It is still alive, right? It's obviously, closing towards the lows of the day, but we're not closing below those, key levels like I mentioned. So technically speaking, the bulls, the dream, if you will, for the bulls is still alive. It's not gone by any means. Now, the bears, what do the bears want to see? Well, the bears, like I said, lower lows, lower highs, right? We were making higher highs, higher lows here the whole time. And then we finally made this lower low, lower high, lower low, lower high. Well, at least it could be a lower high. But for all I know, it is a lower high until proven otherwise, especially with the green Fibonacci rejection into potentially at the very least an equal low retest, which then maybe could be a double bottom or just, well, another lower low. That's the bearish structure right now, right? And if this actually plays out, and if we start losing these key levels here, right, if we start losing this level down here, that would be pretty bearish. And then that, would absolutely increase the probability of coming to my weekly downward targets, where I personally get very excited if we see it. 150, right? Retest of previous all-time highs all the way here. This is where I get very, very excited on a more longer time frame, right? This is all kind of shorter term games right now I'm talking about. But that's kind of what the bears want, right? The bears definitely do not want to lose 181. They definitely do not want to lose those green Fibonacci's, and they definitely do not want to lose these all-time highs up here to the bulls. That'll be very bad for the bears and very good for the bulls. So the bears want to go ahead and clobber this thing back down under 174 and especially under 169/170 once again. That would start getting very bearish. These exponential moving averages will start getting more bearishly crossed over, and especially if they get below the 50, that would be at least in my opinion, a bit of a concern, right? Let's take a look at before when Nvidia had these parabolic rallies. You can see, let's take a look at what happened, right? You can see anytime it's done these kind of pullbacks, well, the EMAs didn't fully cross bearish. So as long as the EMAs aren't fully crossed bearish, I lean bullish. I look for only bullish opportunities. But if they are kind of bearishly crossed, then I look for bearish opportunities. Now you have traps, you'll have situations like this that play out that aren't really perfect, right? Kind of questionable to say the least. But for the most part, when the EMAs are bearish, it's a concern. When they're bullish, you can absolutely make an argument that, you do look for more bullish than bearish opportunities. But, if you start taking structure into account with these lower lows, lower highs, it just adds another layer to the game. Again, it can get pretty complicated if you really dive too much into it, which is why I try to keep it simple. But those are the main levels, I guess, to make it simple. Those are the main levels to kind of watch for in terms of breakage to the upside and to the downside and what it can actually mean for the stock. Again, in breaking above 181 and especially all-time highs, I see, nice all-time highs up higher. I wouldn't be shocked to see the, very nice into the 190s, maybe testing 200s. But again, losing these key levels down here, 150 becomes my main target to the downside, right? So let's continue monitoring Nvidia in this kind of shorter term sort of tightness, if you will, building up right over here with 174-ish as the key support and this potential bullish breakout trend line as the current resistance, but a breakout, of course, would be bullish. And then I think at the very least, we'll see a 181 retest, but maybe the bulls will have the strength to finally, break through it, right? So let's continue monitoring that, guys. But that's kind of the main thing I'm looking at right now for Nvidia. Let's take a quick look at the actual broader market, see how it's acting, right? The market's looking, bullish, obviously bullish, but, questionable candles a little bit, right? QQQ not as bad. The fact that we closed red after breaking all-time highs, not the sexiest look in the world, I would say, but we are pretty extended. That's the thing I would say. We are pretty extended from the 9 EMA. So, it's worth mentioning that the market is a little heated here, right? It is a little too hot, in my opinion, right? So don't get your hand burned on the stove kind of thing. It's a little hot. It is a little hot. So, if we get any pullbacks back to previous all-time highs on the Qs, for instance, to the 9 EMA, mid to low 580s, that's pretty good. I don't see too many issues, but below 580, we could start running into a bit of issues, right? That could start getting a little bit more concerning. Let's just say that. Same with this SPY, more or less, right? SPY also a little bit on the more heated side, not as much as the Qs, but a little bit extended from the 9 EMA as well. You can see it usually pulls back to it, right? Whenever it gets too extended, it pulls back, a little extended, pulls back, and now we're a little extended. Wouldn't be surprised to see a bit of a pullback, right? But SPY is printing a bit of an uglier candle, right? You can absolutely make a bit of an argument. This is a bearish piercing candle. Let me show you guys what that looks like roughly. You can kind of make an argument. It is a bit of a bearish piercing candle, which is this left one right over here, right? Where you had a nice green candle. Then you had the next day being a bearish or a red candle that actually went to new highs, but then ended up closing not only in the red, but about halfway or lower into the previous candle's body kind of length, if you will. And that's kind of what happened here, right? We obviously had a nice candle yesterday. We ended up opening up above the yesterday's highs, and then we ended up just getting sucked back under, and we closed at or below the halfway point. You can kind of make an argument this is a bit of a bearish piercing candle. So let's see how it goes into, again, could be an eventful day tomorrow. We have the potential rate cuts tomorrow. We have triple witching on Friday. And the second half of September is usually the weakest part of in the year of the markets, right? So let's see, guys. Let's see. We could be entering some turbulent times here. The VIX is spiking. I'm kind of surprised the VIX is even this high, considering the market is continuing to rip higher. The VIX is at 16, while the market's ripping. One of these is wrong. Let's just say that one of these is incorrect. Whether this is the market ripping or the VIX ripping, one of them is wrong because they usually contradict each other. When the VIX rips, the market dips, and vice versa. When the VIX falls, market rips. Right now, they're both kind of ripping, right? They're both kind of moving upwards. So one of them is, we have to call the bluff on one of them, right? So again, let's see how it goes. Let's see how, everything goes moving forward. But yeah, that's kind of my overall perspective right now. It's, we should be entering some potentially turbulent times. So just make sure you're ready for it. Make sure you're not, in some YOLO plays. Not financial advice, of course. You do you. But that's kind of my honest opinion. Anyways, options flow, Nvidia. What do we have here? A bit of a slow day. 17 million bullish flow, about 5 million bearish flow. You had a 1.4 million call here, 150 strike, 1017, but we also had a 1.4 million put for September 19th, actually, 177.5 put. So, a bit of a potential strangle, if you will, there. Who knows? But for the most part, bulls are still in control. But yeah, it's not really nothing interesting, I'll be honest. It's bullish, but not overwhelmingly bullish. It's just, it's bullish. That's all right. It's okay, I guess. Maybe a little bit bullish, but it's not too crazy. All right, not too crazy. Nothing really standing out, in my opinion. So all we can do for now is, let the levels decide for us, guys. And you know what levels to look for. Anyways, thanks for watching. And as usual, I'll see you tomorrow. Peace.